Good evening. Ira Epstein with your SPDR ETF wrap-up, and this wrap-up is for Tuesday, the 29th of March, 2022. I can't wait for this month to be over. You know, it seems that every day that we wake up, there's another piece of news, either dealing with inflation or Ukraine, that makes the markets go literally crazy. Volatility on the commodity side is extreme. The rally in stocks is bewildering, according to the pros, who's probably making money are the retail traders. I've been reading the profiles of who's buying what. And the retail person is buying. The pro is saying you're getting inversions in the curve yield. That's normally not the most bullish condition. Inflation is a runaway. The Fed has to react to it, which is going to possibly hurt the economy. And at the same time, you see like the JOLTS number, the jobs numbers that are available, huge numbers, and people are taking them. Corporations able to still pass on to a good degree the inflation number. COVID, still a rampant problem. Shanghai shut down as an example. And today the government said, yes, that fourth dose for guys that are over 65 and women, I'm one of them, they can get their fourth booster shot. And then they've also given the okay now for the younger people, and I'm talking really young, to get other shots. So the market is getting ready and dealing with what we said. If you read the FDA statement, the CDC part of it, these companies are working on boosters also for the fall. They're preparing that just as we have this Omicron BA2, that there could be a BA3, a BA4, and they're going to try to develop vaccines against those specifically that they can roll out 1, 2, 3 and inoculate the public. Smart moves, this is what it is. But when it began 2 years ago, I think I said, we're going to discover that this disease, and this is what I was reading, I'm no medical person or military person, but everything I was reading pointed from the bright people that this could be like a flu. And you're going to have to keep getting shots year in and year out to defend your body and help it protect itself. Okay, makes sense. When we take a look at BITO, it is still a powerful market on the upside, and as you can see, broke out to the upside there. When we look at the chart action, you can see how it's just trying to stay up at this point in time. It's over the 100-day average, which means it's a little bit overbought, and talking about that, it's also over the upper Bollinger Band. Now, if you understand Bollinger Bands, which are these black dashed lines, quickly, they're an algorithm. And the algorithm is designed to keep the market trading within the bands 95% of the time. Now, you get extreme moves, the market can jump over it, but it's only going to be over at a short period of time, or it can break under it, and it'll go back within the band. Pros use this time frame to take off positions if they're on the short side, or take them off when on the long side. The narrower the band, you treat it a little different because it could be a base or it could be a top that is forming, and you treat that different. I talk about all of that in my Bollinger Band course. You can find out more, by the way, if you just take your cursor, move it up at any time here. It'll give you a link that you get to learn about all that, and there'll be an ad at the end of this that talks about that as well, since it's so important. Slow stochastics overbought. We have a market that's had a hell of a run. It's sitting here at resistance points of the 100-day average in the upper Bollinger Band. I have a cursor here that I missed taking off, but you know, it's okay because it's on the last day of trade. Just yesterday, this is amazing. Just yesterday, we were talking on AMC that if the market, this was Friday, if the market decided to move, what would it do? This is the action today. I mean, it's unbelievable that it went to the 100-day and the 200-day average. I think the pros up at the 200 are dumping this by the basket full. I think that, you know, if you look back, what did you do last time you were up at these numbers? You lost 2/3 of the value. And I know you're going to tell me the movie business is different. I'm going to give you a secret. It ain't. There's nothing different. Go to a show. Nothing's different. You can eat in your chair at inflated prices. That's wonderful. We have Apple. Higher lows, higher highs. running into the upper Bollinger Band. I'm looking here and saying, okay, what do we have? Do we finally have an embedded reading? Day 1, Friday, day 2, day 3. We do. But you had to go up 11 days in a row to make it embed. I'll let somebody else buy the correction off of that. That's not the way you want to see this. Is it strong? Unbelievable. But it's also gone from lower band to upper band. I know how pros typically trade. I can't tell you that everything works the same all the time. It works that way most of the time. That's where I think they're coming out. In XLF, you have an embedded reading. So the markets will buy breaks, looking for the upper band, which the market hasn't gone to. So what do you do when it doesn't hit that band? There's another tool called a window envelope that you use in conjunction with Bollinger Bands. It's the closest of the two, especially when they're on top of each other, that you run against. I described that in my morning videos for my subscribers. Disney, now right up to where I thought resistance would show itself. We talked about that. You're overbought. I'll let somebody else want to own it. I think the smart money's bailing on that. Here's what's happening in the market as a whole. The pros are skeptical, watch financial TV, of buying into this rally. The Mimi boys, the retail trader, they're scared of nothing. And they're going, we the old timers don't know what we're talking about. This market's on a tear to the upside. It's going a lot higher, and it's going through those highs. They're right at this point in time. We'll see how long that lasts. But you have to, they are right. This market has come alive, and the trend is up. You don't fight the trend. You don't try to say, well, here's the reasons why it shouldn't be going up. That's wonderful in a classroom, but as a trader, the trend is up. The market's holding support areas. Now, I think today in semiconductors, people were dumping. Why? Because you hit the 100-day average, which is right on top of the upper band. That doesn't mean I'm bearish. With the embedded reading, I think they'll buy the breaks until on market upon market upon market, when the red line closes under 79, the correction will have begun. In the home builders, you got to bounce into the resistance area, the 18-day average of closes. You have to get all the way back now over this day's high right here, 70.53, in order to say, hey, this could be more than just a bounce. Otherwise, it's just a bounce at this point in time in a bear market. Energy keeps holding each break to the 18-day average of closes. Learn to recognize that. That is where, not the Bollinger Band, it's a bull market. That is replacing the Bollinger Band. If you get down the Bollinger Bands in this period since the Ukraine war began, then you've got to say something changed. It hasn't changed, so the line in the sand is the important number. GLD, the market failed. Complete failure. As I said, gold is probably the most disappointing asset I can think of. It does not perform in war, inflation, or anything at this point in time, period. You can say what you want. It's a terrible performing sector. It's something, in my opinion, now to avoid. The gold miners today, they gave it all up. They'd been trying to hold in the place of gold, hoping gold would hold. It didn't, and once you got under 37 and a quarter, you went right to that Bollinger Band area. That's where you should hold. Again, you'll want to see this ad. You've got to learn Bollinger Bands. They're one of the most important technical tools ever developed, in my opinion. Copper, running against that band, you're going to pull back, but you're embedded. You're not losing your way in this market. It's still being bought, and I think it'll stay bought until the red number closes under 79. When that happens, I look for prices to get to the 18-day average. Got it? And that's where the game starts afresh. TLT, you lost the embedded reading. Here's what you do on your bearish idea now in that market. I'm going. I booked my money. It's been a phenomenal bear run. It ended today. That does not mean I'm bullish. Back to the drawing board, but because you lost the embedded reading, so long, adios, arrivederci. UUP, that's the dollar. We talked about the dollar going into sideways action. That's exactly what it's doing. But the euro popped today out of nowhere. Peace talks. That's what drove this. Watch. Bingo. Where did you stop? Bollinger Band. Click on this link or watch this ad. Learn about Bollinger Bands. I'm Ira Epstein. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.